computer. Okay, so let me do this. Okay, so here, okay, we are preparing a statement of cash flow, right? Statement of cash flows. Okay, so this is the title of the statement, right? Make sure we write it down clearly. And then we write the company name. The company is Charmaine Retailers Ltd. And then the third line is about the period, right? For the year, right? Ending December 31st, right? 2018, right? So make sure when you prepare a statement, you make sure you have these the headings, right? These 3-line headings here. Okay. So, okay, let's see. Okay, now remember there are 3 different activities, right? You have operating activities first, and we are using indirect method, right? We are starting with the net income. So my net income is in the point number 1 on page 744 under additional information. Okay, on page 744, additional information, bullet point 1, net income was 62,000 in 2018, right? 62,000. Okay, and then I needed to deal with adjustment on non-cash items. So this one, the first one will be depreciation. So I need to add depreciation expense. Why? Because this is not a cash flow, right? The cash flow is about purchasing the asset, okay? This depreciation expenses is just allocating that cost into different period over the useful life of the asset. It does not represent in cash flow, right? So therefore, you should not deduct it. You should add it back. So that's why we add depreciation expenses back. So that's going to be bullet number 2. Bullet point number 2, depreciation expenses was 21,000. Okay. So now let's make adjustment on the working capitals, right? Adjustment on, let's say, current asset. Okay. So let's go back to page 743. We were presented with the 2 comparative numbers for the 2 years, 2017 to 2018. We are talking about the year of 2018. So the balance, the number for 2017 is the opening balance for 2018. Okay. So if you see the 2 rows, right, 2 columns, the column on the left under 2018, that is the ending balance for this account for the year of 2018. And the right column is the 2017 ending balance. 2017 ending balance is the opening balance of 2018. Okay. So if you take a look at accounts receivable, okay, for the year of 2018, the opening balance is 42,000, and the ending balance is 50,000. So can anyone tell me AR increased or decreased? For the year 2018, AR balance increased or decreased?
Increased by 8,000.
Very good. Increased by 8,000. Okay, how does this affect your cash flow? Okay, do you when you increase AR, okay, when you increase AR, so if you have sales, right, you either have AR increase or cash increase. If your AR increased, so that's kind of like a cash decrease, right? Does that make sense? Because otherwise you are going to receive the cash, but because the AR increased, you don't receive the cash. So this is a negative. So you minus 8,000. Does this make sense? So if asset increase, that's represent a cash decrease, right? So for inventory, if your inventory increase, you are purchasing inventory, right? So you are using cash to purchase inventory, right? So you made a sales, right? You could have a credit sale or cash sale. If you have credit sale, your AR increased, so you didn't receive the cash, right? Otherwise, you would have cash sales. You're gonna increase the cash, right? So the fact AR increased, that means you didn't get the cash. So the cash is negative 8,000. And now let's take a look at the inventory. Can anyone tell me what happened to inventory? Increase or decrease, and by what amount?
Increase.
Increased by what amount?
168,000. 168,000.
Yeah, that is the ending balance, right? So I'm asking about the amount of increase. So the difference between ending and opening, right? That's the amount of increase. So that should be, you are right, 168,000 minus 143,000. That is the amount of increase, right?
25.
25,000. So this is, you increase inventory is like you are purchasing inventory, right? You use cash. So here, positive or negative?
Positive?
Positive. So you
Yeah,
receive cash. Positive
Yeah.
means you receive cash, right?
Yeah.
So
What-
when you
No,
purchase inventory, you receive
it would
cash.
decrease because you're paying for the inventory.
Yeah. So are you receiving cash or you use cash?
Using cash.
Using cash. So your cash decrease or increase?
Decrease.
Decrease. So that should be a negative 25,000. Okay, very good. Next is the furniture. That's a long-term asset. Should I keep doing here long-term asset? Should I deal with the long-term asset here?
No.
No, because I'm dealing with current asset. Operating activity, if you remember on Monday, I talked about this. Operating activities deals with current asset and current liability. Investing activities deals with long-term asset, okay? So now let's do that's all the current asset. Now let's make adjustment on current liabilities. So the first thing is AP, right? Accounts payable. Can anyone tell me how AP change?
Increased.
Increased by how much?
10,000.
10,000, okay. Is this going to save you money or use your cash? Save your cash or use your cash?
Save your cash.
Yeah, save your cash. So you have a positive 10,000. Think about it, right? If you buy an inventory, you debit inventory, you either credit AP or credit cash, right? If you credit AP, right, your AP increased, so you save the cash, right? You don't have to credit cash, you save the cash. So the cash increased by 10,000. And bank loan payable is called a non-current. So that tells me this bank loan payable is a long-term liability. Should I do the bank loan payable here?
No.
No, right? Because it's only due with current liability, right? Okay, so now let's take a look. What is the cash? Let's sum it up, okay? I'm going to sum up all these numbers. Okay, so this is a positive. So the cash generated from operating activities is 60,000, right? Are we clear with this? Awesome, thank you. Now let's take a look at the next one, investing activities. Okay, so this one, like I said, only deals with long-term asset, okay? Only deals with long-term asset. Can you tell me what is the long-term asset for this company?
Furniture?
Furniture, thank you. So we are going to have two accounts, right? We have a cost account. It's called the furniture, right? We are going to have, I'm just doing the T account here, cumulative depreciation furniture account, right? That's the two account. Okay, so I'm going to do a T account. So just give me 1 second to set it up. Okay, so the furniture opening balance is 80,000. And the opening cumulative depreciation, 24,000. And the ending balance of furniture is 163,000. The ending balance of cumulative depreciation is 45,000. Okay, so I have a difference here. This minus this. This minus this. This will be the change, right? So if you take a look at point number 5 on the next page, in 2018, no furniture was sold. That means you do not remove any cost from this side. You do not remove any cumulative depreciations, right? When you sold the furniture, you're gonna do this side and this side, okay? So can anyone tell me what is this 21,000? Can anyone tell me what is the 21,000?
Isn't that the depreciation expense?
Good job, Ruben. Good job. Okay, if you remember, the depreciation expenses, debit depreciation expenses for 21,000. What do you credit? Cumulative depreciation furniture, right? For 21,000. And so this is a number. This is a number. See, credit on the right side, right? That's where this number comes from. Okay, that makes sense, right? This number makes sense. And then what is this? Can anyone tell me what is this? So you debit furniture for 80,000. What do you credit?
Depreciation amount?
Not really. We already depreciation amount. That's the expenses, right? You debit the depreciation expenses. You credit the cumulative depreciation. Right?
Okay.
So
Would you
why
credit
you
cash?
cash? Yes. So you credit cash, right? right? So this tells me that you purchased a furniture that cost 83,000, right? Because otherwise, how can your ending balance increase to 163,000? Your opening is the cost account is only 80,000, and there is no disposal. The only way to explain this is that in the year the company made a purchase of equipment in the amount of 83,000. Okay, so investing activity, we can say purchase furniture. Okay, are you going to use money or you are going to receive money?
Use money to purchase furniture?
Yeah, so positive or negative?
Negative?
Negative 83,000, right? And this is the only long-term asset, right? So then I will say cash used for investing activities. That's going to be this number, right? It's just going to be this one. That's the only activity, right? So now let's move into the financing activities. So I'm dealing with long-term liabilities and equity, right? So from the balance sheet, my first item for the long-term liability is the bank loan payable, right? Bank loan payable. So I'm going to do a T account. Bank loan payable. Okay. Okay, so the opening balance is 76,000, and the ending balance is 103,000. Okay. And if you take like the bullet point number 3, payment made to the bank pertaining to the bank loan was 10,000. So you make a payment 10,000. Okay. So what is this? To make it balanced, what is that? So you repayment, right? Bank loan repayment.
Is that 37,000?
37 here. Okay, 37,000. I think you're right. Because this number plus 10,000 minus 10,000 plus this number should equal 103,000. Okay, so then you work backward. This number should be 37,000. So what is this? This is a repayment. This is a repayment. What is this? Okay, let's talk about the repayment. So if you repayment on the loan for 10,000, do you add 10,000 or you minus 10,000? You repay the bank for 10,000. Do you use money or you receive money?
Use.
Use, right? So then you minus 10,000. So what is this? What is this one? This is, you get a new loan, right? Receiving a new loan, right? When you credit bank loan payable, you receive a new loan, right? Do you receive money or you use money?
Receive money.
Receive money, 37,000. So this is a long-term debt, right? This is a long-term debt, bank loan payable. And then the last one is bullet number 4. Bullet number, I'm just going to copy this. So bullet number 4 is about common shares. Okay, common shares. So the opening balance of common shares is 55,000. ending balance is 60,000. And then you take a bullet number 4, common shares were issued in 2018, no shares has been bought back. So this is a 0. There's no share bought back. So this one is 0. So what is this then? 5,000. Okay. So here you issued new common shares for 5,000. Do you receive 5,000 or you use 5,000? Receive or use?
Is that received?
Receive. So it's a positive 5,000. Okay, so now let's take a look at this. Okay, let's take a look at the sum. So now I'm done with all the counts. 32,000. So this is cash generated from financing activities. So total change in cash. So then I'm going to add up these numbers, right, from the 3 activities. From operating plus from investing plus from financing. Okay, so the change in cash, okay, in total is a net cash increase of 9,000. What is my opening balance of cash? Opening balance of cash. So if you take a look at the cash balance, the opening is 9,000. And what's the ending balance of cash? So in the beginning, you have 9,000, and during the year, you increased by 9,000. So now you have 18,000 ending balance. Does that make sense? So we figured out the cash balance at the end of 2018 should be 18,000. Does this agree with the statement of financial position? Yes or no?
Yes.
Yes? Okay. So now you can see how this statement explained the cash difference, right? You can see the cash balance starting for the year of 2018 is 9,000. At the end of the year, it's 18,000. There is an increase of 9,000. So then the question is why there's a cash increase with 9,000? Okay, so then I can tell them actually the cash from operating is making money, right? Making the cash flow 60,000. And even financing, right? I'm able to get additional money from either the bank or the investors. So 32,000. So together, that's my 96,000. And I used $83,000 to purchase the equipment. So I have $9,000 left. So that increased my cash for $9,000. The ending balance is 18,000. Does this make sense?
Yeah, to me.
Yeah. So it's not that bad, right? After you listen to me going through this, it's not that bad, right? This question.
Yeah, this makes a lot more sense than it did for me.
Yeah, awesome. So then the next question is assess the strength of the company's cash flow for that year. The strength of the cash flows. Okay, so for this year, so the operating generate 60,000. Okay, that's good. It's generating a positive cash flow. And they need to finance their investment. So they invest $83,000 into the long-term asset for the furniture to further expand the operation, right? So if they want to increase the operation, they need to have more long-term asset, right? Therefore, they decided to buy this furniture that cost $83,000. But the company only generates $60,000 cash, right, from the operation. So they need additional 23,000. So what they do is they issued common shares to receive $5,000, and they are able to get new loans, right, for $37,000, and they repaid $10,000 loan. So the net of this financing is 32,000. Okay. So you need additional 23,000, but once through financing, you get 32,000. So you ended up with a positive cash flow of 9,000. Okay, so you have more cash increased by 9,000. Does this make sense? So the idea is you just have to practice on your own, right? Just have to find some similar questions to practice on your own. And if you did something wrong with this statement, you always know, right? If your number, you calculated this number, doesn't agree with the number on the balance sheet, then you did something wrong. This number calculated, right, is always agree with the number provided by the financial statement, the ending cash balance of 2018. Okay, so if this number does not tie to the book, then you are in trouble. So something you did wrong, okay? Does anyone have any questions on this? If you are clear, hands up. 3, 4, 5, 6, 7. So yeah, we still have maybe about 5 students, is not sure. So just let me know, okay? If you need any help, just let me know, okay? Thank you. Okay, so this is what I'm going to talk today. So just a reminder, assignment and the Moodle quiz due Friday. Make sure you try to work on it as soon as possible. And there are lots of tutorial videos, right? You know, you want to practice by yourself and then check the videos, right? See if you got it right. So if you don't have any other questions, the class is dismissed. Feel free to stay around if you have any question, okay? Have a wonderful weekend. Too early to say that. This is only Wednesday, but I won't see you until next Monday. So have a good weekend.
Thanks, you too.
Thank you.
Thank you.
Bye.
Thank you.
Bye. Take care. Okay, Judith, do you have a question?
Yes, please. The question 6 and the assignment, the question 6, I think they actually is what I have to do is exactly this, what we see today. But anyway, I would like to, if you don't mind, the question 6 in the assignment.
Question 6?
6, yeah.
Oh, question 6. So is that on page 742?
No. It's in the assignment. Wireless plus.
Okay. Is that in the quiz? Is that a quiz question?
No. It's the next assignment for Friday.
Is that on Moodle website? Is this a question for assignment, for quiz, or it's for practice?
It's the assignment for Wireless Plus. Wireless Plus.
Okay, so just give me 1 second. Okay. Okay, just give me 1 second.